Hello friends, welcome to Proficient's quick webinar. It is 31st of August 2018, Friday. Market just closed 1.5 hours ago, and I'm Shumoy Goshani. This week again we are going to take a sort of how the market behaved over the past 1 week and what is likely to happen in stocks and commodities. And let us first take stock of the situation from a dollar index. Then we will look at the commodity complexes. Then we will see what the US markets are doing, and finally we will come back to our Indian markets. So let me open the chart of dollar index, and you will see how dollar is behaving lately. This is the daily chart of dollar index, as you can see, and the strength is pretty obvious. Prices are making steady higher bottoms, and these higher tops and higher bottoms are actually the trademark of any uptrend. Look at the moving averages. The moving averages are perfectly sloping upward, and prices are actually strongly trending. Only lately it has come below this 50-day moving average. So the trend is pretty clear. It is uptrend. Last closing of dollar index is at 94.6, and as you can see on this diagram, 94 region is a strong support for dollar index. If 94 region gets broken downward, only then some pullback is expected. But nevertheless, it is an uptrend, and even 200 DMA is far below. So we are not expecting much weakness in dollar, and that is perfectly evident from our domestic currency. Rupee has made a new lifetime low, and it has in fact broken 71. So the strength of dollar is evident everywhere, and this is taking a toll on most of the commodities. Let me show you the daily chart of gold. Since gold and most commodities are denominated mostly in dollar terms, strength in dollar will obviously be bearish for most of these commodities. And again, that is evident from the daily chart of gold. As you can see, in gold we are having a strong downward trend, that is an intermediate downward trend. Prices are making steady lower tops and lower bottoms. 1220 was just touched this week. This was a pullback, and these pullbacks are happening below 200-day moving average or 50-day moving averages. So these are in fact opportunities to open new short positions. As of now, it is trading at approximately 1205 regions, that is 1205 dollar per ounce, and from here, if it manages to go above 1220, only then we can expect some meaningful strength in gold. But that is unlikely to happen, and as dollar index is steadily above 94 region, and it is likely to gain more strength, so we are expecting further weakness in gold. So 1220 is the region where you can place a stop loss for short position in gold, and let's see how things span going forward. So this is our bearish opinion in gold. Let's see how crude oil is doing. Now, crude oil is also denominated in dollar terms, but there are other fundamentals as well. The dynamics in crude oil is much more complex. and it is mostly driven by the supply disruption. Right now, there is some threat on supply front in crude oil, and that is why the prices of crude oil is rising. And if you had attended our earlier seminar last Saturday, that is, then you'd probably remember that we had given a perfectly bullish opinion in crude oil. And crude oil, in fact, in our domestic market, that is in MCX, actually closed above rupees 5,000 per barrel. And that happened almost after 2 long months. So that is a 2 month highest closing back home. Although that was supported by weakness in rupee, because in dollar term crude oil has actually not made a new 2 month high. So what we can deduce from it is that in dollar term there is much more higher level that can be attained, and we have to maintain our bullish opinion in crude oil. So last closing was at 70.25, that is light sweet crude oil. Brent would be higher. At this region, there is a little bit of resistance at around 70.5 to $71 per barrel region. There is little bit of resistance for crude oil. But once this resistance are taken out, and what is possible to the downside? 68 region, there is strong support in 68 region. So unless 68 gets broken and 71 is taken out on the upside, we are expecting higher prices, right? The July top was at 74 or $75 per barrel region, and we are expecting that kind of prices going forward if 68 is not broken, right? So that is our overall opinion in commodity complexes. We are giving bearish opinion in gold, and we are giving a bullish opinion in crude oil. Having said that, now let us take a stock of the situation in US equity markets. Let us open the daily chart of S&P 500, that is SPX as it is commonly called. And nothing much has changed since past 1 week. And you can see the index is quite steadily trading above the previous highs, and it has been making new lifetime highs. Thursday's close was at 2901. So you can see the higher bottom formations. These higher bottom formations are actually the trademark of any uptrend. So the uptrend is pretty intact. We are not going to predict any sort of trend reversal, right? I know prices are pretty overstretched. Almost all indicators and oscillators are quite overbought, right? And the prices are not justified. All that is true, but being a trend follower, we have to honor the trend and we have to trade in the direction of the trend. So as long as no meaningful bottom violation occurs, right? Why I'm saying bottom violation? Because an uptrend is classified by a series of higher bottoms. Now, once a previous bottom gets broken, the series of higher bottoms actually ends. So at that point, we cannot say that the higher bottoms are being maintained, and that is where the troubles begin. Troubles start to begin of the uptrend. So we can conveniently say, as long as higher bottom formation is being maintained, the uptrend is pretty intact. So where was the last higher bottom in S&P? Last higher bottom we can see on this daily chart at 2810 region, 2815 region. So there is a pretty long downside possible in S&P 500. But even that kind of pullback will not terminate the uptrend that S&P 500 is presently in. So, and even that occurs, even if that occurs, I do not know if something of that kind will occur. But even if that occurs, that will be buying opportunity, right? So pullbacks are always buying opportunities in an uptrend, just like the mm, pullbacks in a downtrend are selling opportunities, right? So pullbacks in an uptrend are buying opportunities, and if any pullback occurs in S&P, the ultimate make or break zone for this uptrend is 2810, but there is a minor support at 2850 region. So if prices come to that low, then we can take some mm, some buy positions, right? Now, having said that, let us come to our domestic market, how the markets have been doing in our domestic front, that is Nifty. And as you can see, this is the daily chart of Nifty. Today we closed at around 11,680 region, and past 3 days, for the past 3 days, volatility has increased. There is no doubt about that, and that is the only concern. There is no other concern. Volatility has increased. For example, today we went as high as 11,727, but did not sustain there, and we closed only 2 and 3 points higher than yesterday. And although today's closing is another lifetime highest closing for Nifty on weekly closing basis, not on daily closing basis, on weekly closing basis, we got another lifetime high. So trend is pretty clear. This chart, whatever you can see on my screen, is the daily chart of Nifty, and there is nothing to differentiate it from the daily chart of S&P, right? So the series of higher bottoms are quite easily visible. The moving average here, that is the 50-day moving average or 200-day moving average, all these moving averages are sloping upward, and yeah, prices are pretty strong. So as far as the trend in Nifty is concerned, we do not see any immediate threat as of now, but obviously this week's low was at 11,600, and if 11,600, that is if this week's low gets broken sometime next week, then some pullback will be possible. But just like S&P, for S&P, the major bottom we saw there at around 11,810 or 15 region. So similarly, in Nifty, the most important bottom occurred on this particular day, which is 13th of August, at around 11,355. So as long as 11,355 holds, we do not see any threat, any immediate threat to the uptrend, right? So that is our view in the overall market, but as it is evident, and we also have been telling this for the past several weeks, that market have been extremely narrow width, right? The width of the market have been pretty narrow. That means not all the stocks are moving, although lately there is some pickup in mid-cap stocks. Some mid-cap indices have been started moving, taking up momentum, but that is only at a preliminary stage, and we can still spot only specific points of action, and we have to spot those opportunities. Otherwise, we will mostly miss the movements. So going forward, we see movements not only in many sectors, but only in select sectors. Among those select sectors, we see first of all the pharma stocks, and this pharma sector have been moving for a very long time. Initially, Hindustan Unilever, Dabur is also performing quite well. So is Hindustan Unilever. These stocks were performing, but nowadays ITC has also joined, and ITC is also taking a lead position. So ITC, we are maintaining our bullish opinion in ITC. We will show the chart how the stock is looking. This is the daily chart of ITC. As you can see, it is a perfectly bullish setup. And if we make it a bit longer term chart, this is the weekly chart, right? And as you can see from this chart that this particular breakout occurred. ITC used to trade in a consolidation position for almost 6 months, and the 6-month consolidation zone was broken out only in the second week of July, and this breakout is pretty important as there has been a base formed. So we are expecting higher prices for ITC. We are expecting ITC to take out the previous top, that is at around 350 odd levels. Current price is at 320. So you can trade this stock from the long side. You have to take the stop loss at around this level, which is at 310. So from the FMCG sector, we see that ITC is most likely to outperform going forward. There are other players as well. There are Hindustan Unilever, there are likes of Dabur. Dabur have been showing strong momentum. This is a chart of Dabur. Yeah, as you can see, from the last week of July itself, Dabur appreciated pretty heavily. There is strong momentum, and right now it is consolidating a bit, and prices are now 478. I'm not expecting big pullbacks. There is strong support at 460 levels, then 445 regions. All these supports are positions where we can take additional long positions in Dabur. So Dabur is another stock in FMCG sector that we are expecting to continue going higher. Hindustan Unilever is a star performer in this category, and it is not as strong momentum. It does not have as strong momentum, but the uptrend is pretty clear. Uptrend is pretty reliable, and from the chart, it appears that there have been bottom formation, but these are only preliminary stages. 1750 could be the stop loss if you take a buy position in Hindustan Unilever, and any higher prices are possible provided 1800 is taken out. 1800 was the last time when Hindustan Unilever saw some selling pressure, so it has to take out that resistance. Once it takes out that resistance, it has the potential to go even higher. So you have to use a stop loss at around 1750 for Hindustan Unilever. So you can see these are the important FMCG stocks. Those are likely to outperform. Then another stock another sector rather, that is picking up momentum is the pharma stocks, right? This is a new entrant, although I may have shown this sector in one or two of our previous sessions of webinars. But pharma stocks, it seems that there has been a long downtrend, right? The primary downtrend in most of the pharma stocks are actually exhausting. And after making a bottom, say for example, Glaxo, right? Let us take the chart of Glaxo. This is the daily chart of Glaxo. You are seeing here some 4 months of daily chart, daily price action in Glaxo. These moving averages are 250-day moving averages. And if we see a bit longer term chart of Glaxo, you can see the downtrend here and the way the downtrend ended. This downtrend ended in second week of April itself, and after that you can see how strong movement it has put up, right? So Glaxo Pharma, which is also called the GSK Pharma, is one of our topmost bets in this sector. So we are expecting pharma stocks to continue to move higher. In fact, they have created a bottom, and they are likely to go higher, right? Another stock in this sector that we like is Ajanta Pharma. This is the weekly chart of Ajanta Pharma, and this is the daily chart. It looks interesting because Ajanta Pharma is actually closing above the 200-day moving average, right? For the first time since May, right? So that is bullish. We can see a bit of bottom formation. The slope of the moving averages are getting higher. So in the long term, we have reasons to be bullish in Ajanta Pharma as well. So overall, pharma sectors are picking up momentum. Not all the pharma stocks, Ajanta, Aurobindo Pharma, Glaxo, these stocks from pharma sectors are more likely to outperform the Nifty going forward. And one more thing that comes to mind is the PSU banks, right? Now, this is pretty interesting that PSU banks, just like the pharma stocks, are also forming a bottom, and they are trying to go higher, right? The extended downward trend in PSU stocks are also nearing an exhaustion. So there may be a strong upside potential for PSU banks as well. Let's see how some PSU banks have been doing lately. Let's open the chart of SBI. How SBI have been doing. Today its closing is at around 309 region, and you can see there is a sort of bullish crossover in the moving averages. That is, the 50-day moving average is going above the 200-day. Okay, that is not entirely unexpected, but the chart pattern looks good, right? Let us take a wider view. So this is the weekly chart of SBI, and you can see that the stock has made a bottom, right? And the bottom is significant at around 240 or 250 odd levels. Then we can also see a higher bottom at around 270 to 260 odd levels. And after that, after this much of bottom formation, SBI is actually going higher. So this is the industry leader. There may not be much of momentum in SBI, but the industry leader, if the industry leader has some upward trend, then we can expect the followers to put up some good momentum. Let's see how Bank Baroda is doing, right? So this is Bank Baroda, And just a minute. Yeah, this is Bank Baroda. And yeah, the chart looks pretty interesting. Not only it is negotiating the 200-day moving average, that moving average is the 200-day moving average, it is negotiating, but the breakout gap that occurred in the 3rd or 4th week of July is actually working as a support. This kind of gap that you can see on my screen on the penultimate day of July is actually a breakout gap, and it's this breakout gap is providing great support. So a strong there is a strong possibility that Bank Baroda will rise from here, right? Today it closed at around 153 region. You have to keep a stop loss at 146 or 145 region, and take a long position in Bank Baroda. Let's see how the longer term chart is looking. And yes, this is the weekly chart. Yeah, it is looking pretty well, right? The closing on weekly basis is highest in past 4 months, and the intermediate downward trend line has been broken. So Bank Baroda, so overall PSU banking stocks are looking well, looking good, just like the pharma stocks that have ended its long-term primary downtrend. The same can be told about the PSU banking stocks. So that is another sector where we are expecting much action going forward. And one more sector that I will like to draw your attention to is the softwares sector, that is the IT stocks. And I will prefer the large cap ITs, mainly the Infosys, mainly the TCS, like those things, right? So this is the weekly chart of TCS, and this is the daily chart of Infosys, right? This is the daily chart of Infosys. As you can see, 2 weeks ago we got the price took a shock, right? When some official of Infosys resigned, prices opened 50-point gap down, but that was the bottom. That price never broke that bottom, and made another higher bottom, and today's closing is another lifetime high, right, on daily basis. So this is how uptrends actually move. They make new highs, then they pull back. When they pull back, that looks ugly, and nobody has the conviction to buy. But and again, some buyers slowly emerge from these buyers are these buyers are these buyers have deep pocket, right? So they are strong buyers, they are not weak buyers, they are not buying on leverage, and then the stock again proceeds higher and makes new lifetime high. So this is how classical uptrend looks, and this is what we can see in the daily chart of Infosys. As you can see, there is nothing much to explain. Series of higher bottoms, slope of the moving average is higher. So this is the stock to buy. Uh, there is no point in judging whether these kind of stocks are overvalued or not. Just you have to trade these stocks from the long side. Today's closing is at 1441, and immediate stop loss will be at 1400, and actual stop loss will be better stop loss is 1375 region. That was where the last bottom was made. So it is better if you buy on a pullback and buy in installments. You create a core position and then add to that, right? So that is a safer option. TCS, we cannot forget this stock, although there was a little pullback today, but look at the chart, how strong movement has been over the past several months. and yesterday's closing was another lifetime high at around 2184 regions. So it is also showing strong momentum, although that is true in daily chart. In intraday it moves pretty slowly, but this is a chart to trade from the long side for the long term, right? This is not a short term trading candidate. So I'm just showing you the stocks, the charts, and giving you the trading idea. I can mostly give you the general direction of the market, the general direction of the uh, general trend direction of most of the outperforming stocks, and I can also give you the stop loss for a short term. That's the most thing we can do. There are also some weak stocks that can underperform, mainly the oil marketing stocks. Although ONGC was making some high today, but the overall structure is pretty weak. And one more thing that comes to mind is Tata Motors. This stock I have to mention about it because there is a feeling that yeah, this is the chart of Tata Motors, and this is the daily chart, and there is a possibility that Tata Motors might be trying to form a bottom at around 250 region. So going forward, if 250 region is not broken, this bottom may hold. So today's price is at 267.5, and if Tata Motors really manages to go above 275 or 280 region, then that will be pretty strong confirmation that the primary downtrend is nearing an exhaustion, and we can trade it from the long side. But still, this is a premature statement as yet, because the consolidation that I'm saying is only 2 months old against the primary downtrend that is many months old. So we have to keep a close watch on this stock, right? Uh, this stock could be forming an important bottom, and once 275 or 280 regions is taken out by Tata Motors, we can see even higher prices, right? And most importantly, the downward trend may be exhausting. The downward trend may be ending for Tata Motors. So these are the stocks. These were the sectors that I thought it would be prudent to show you for next week. Uh, the FMCG stocks, the pharma stocks, the PSU banking stocks, softwares, and a little bit of auto in the name of Tata Motors. And overall market view is bullish unless 11,325 region is taken out. We will maintain this overall bullish opinion. So that was the view from Proficient for next week. I hope you enjoyed it. If you have any query, please put up your questions in our YouTube channel, and enjoy your weekends. Thank you, and see you next week.